Thank you for joining us at xm.com. In this preview video, we'll be looking at incoming U.S. data. They will be important for investors to adjust their Fed policy expectations and perhaps alleviate worries about an impending recession. I'm Cristina Marujos. With me today is our senior investment analyst, Geralambos Pisuros. Geralambos, retail sales and housing data for April are probably this week's highlights. What are we likely to see in the reports?
Hello, Cristina. Yes, following the slowdown in the CPI for April, but also the jump in consumers' long-term inflation expectations revealed by the University of Michigan on Friday, investors' attention will now turn to the US retail sales for April due out tomorrow. Expectations are for both the headline and core month-over-month rates to have rebounded and exit the negative territory, which could somewhat reduce recession concerns and also raise speculation that the rebound in consumer demand could lead to accelerating consumer prices in the months to come. Therefore, market participants may scale back some basis points worth of rate reductions for later this year and perhaps start considering a higher probability for a hike at the June FOMC meeting. According to Fed Fund Futures, they are assigning an 87% probability for the Fed to step to the sidelines in June, with the remaining 13% suggesting a quarter-point hike. They are also expecting 70 basis points worth of rate cuts by the end of the year. Now, with regards to the housing data, on Wednesday, building permits are expected to have fractionally increased and housing starts to have slightly declined, while on Thursday, existing home sales are seen declining 2% month over month. The Fed's aggressive tightening has pushed the housing market into recession, with residential investment contracting for 8 quarters in a row. But lately, there have been some signs of stabilization, perhaps as mortgage rates have come off their highs. So, further improvement could revive optimism, but also add to expectations that inflation may prove stickier than previously thought.
Now let's turn to the dollar. It seems that the greenback has been caught in a range recently and it's unable to rally on good news. How could it perform this week?
To be honest, the dollar ended last week strong despite the rate cut bets. But yes, you're right. Its performance is far from suggesting a reversal. Rather, it suggests a pause or a correction within its broader downtrend. Now, increasing signs that inflation could prove stickier than previously thought could help the greenback extend its latest rebound, but it will still be premature to call for a bullish reversal, as I see it hard for market participants to remove all their rate cut bets off the table. Should they reduce their bets to 50 basis points from 75 basis points, this will mean that investors remain concerned about the performance of the US economy, which is also indicated by the inversion of the Treasury yield curve. And there will still be divergence between the ECB and the Fed, as the former is expected to deliver nearly another 50 basis points worth of rate hikes by the end of the year. So the euro-dollar uptrend may stay intact for a while longer.
I see. Geralambos, thanks so much. This was a preview video. Thanks for joining us at xm.com.